Ever wonder what actually happens after you invest in a syndication and before you ever see a return? Today, I'm walking you through the entire life cycle of a deal, step by step. For a lot of investors, the biggest hesitation around syndications isn't the money, it's the unknown. Questions like, what happens first? When does my money actually go to work? And how do I get paid? And what's really happening behind the scenes? So today, I'm breaking down the life cycle of a real estate syndication, from the moment the property is identified all the way until the final sale and profit distribution. No jargon, no mystery, just clarity. Phase 1, finding and underwriting the deal. Everything starts long before an investor ever sees an opportunity. At this stage, the sponsor, or general partner team as you may know it, is sourcing deals through brokers and relationships, analyzing dozens, sometimes hundreds of properties, stress testing assumptions like rents and expenses, and evaluating markets and submarkets, even down to the neighborhood. Most deals never make it past this phase. You'll never even see them. Think of this as the filtering stage, where bad deals quietly disappear so good ones can move forward. Okay, phase 2, due diligence and acquisition. Once a deal passes underwriting, we move into due diligence. This is where we confirm everything looks the way that it should and nothing looks the way that it shouldn't. This includes physical inspections, financial audits like lease reviews, verifying rent rolls, expenses, and assessing the condition of the property. This phase answers the question, does reality match what the spreadsheet says? If it doesn't, we renegotiate or we walk. If everything checks out, the property is officially acquired and we move to phase 3, which is capital raise and investor onboarding. This is the phase that most investors recognize. The deal is presented to passive investors with a detailed business plan, projected returns, risk factors, timeline expectations. You'll often see this in a webinar or a full recording accompanied by the full investment overview. This is where you get to decide, do I like the deal and the business plan? Does it align with my investment goals? And even conduct your own research or engage with the GP team and ask your own questions. If you decide to invest, you'll review the offering documents, complete your subscription, and fund your investment. And then your capital goes to work alongside the general partner team's capital. And bonus tip here, ask the GP team how much of their own capital they're investing. You want to make sure that they have skin in the game too. And then congratulations, because you are now part owner of a shiny new piece of real estate. Phase 4, operations and execution. This is the longest phase of the deal and the least glamorous. Behind the scenes, the team is focused on improving operations, executing renovations or value add plans, increasing occupancy and efficiency, and managing expenses and communicating regularly with investors. This is where disciplined execution matters the most. And while it may not make headlines, it's exactly what drives cash flow, equity growth, and long-term returns. Phase 5, cash flow and investor updates. During the hold period, investors typically receive regular updates, financial reporting, and cash flow distributions, which are often paid quarterly. This is when passive investing feels, well, passive. You're not managing the property, you're receiving income and transparency while professionals handle operations. And lastly, phase 6, exit and profit distribution. Eventually, the business plan reaches maturity. At that point, the general partner team evaluates exit options like selling the property, refinancing, or executing another strategic transition. When the property is sold, proceeds are distributed according to the deal structure, returning capital and profits to investors. This is the finish line and the payoff for patience and proper execution. A real estate syndication deal isn't a quick flip. It's a deliberate, long-term strategy built around planning, execution, and alignment. And when done right, it allows investors to own institutional quality real estate, generate passive income, and benefit from professional management, and build wealth without operational stress. If you want exclusive access to opportunities like this, join my investor list using the link below. There's no obligation at all to invest, but this is how you get invited to join a deal. In our investor community, I share upcoming deals, market insights, and education so you can invest with confidence.